What's that?
I'll tell you later.
Yeah, okay.
Okay.
Yeah, I know what you're saying. I was just trying to get you to say it on air.
I am not going to do it. Might be the last thing I say.
Exactly.
But what's interesting is, all these conversations I'm having with people too, it's like, I don't get it. My husband, my spouse got it. I'm fine. Or it's tricky. It's tricky.
Yeah, let's go and dig into this a little bit, just to give our viewers and listeners some details. 7 German visitors to Cape Town experienced symptomatic COVID-19 infections between late November and early December, despite being boosted. The researchers whose investigation was authorized by the University of Cape Town and Stellenbosch University said in findings published Tuesday in The Lancet, all the cases were mild or moderate, providing support for the extra shot's ability to fend off severe disease, death, and hospitalizations. So 2 things here, Carol. One, this is a very small study, but it also shows that it's not just about being infected after getting a booster. It's about the experience of having COVID. And if it's one with mild symptoms, which we've heard about so much from people who have had 3 doses of these mRNA vaccines, then that's obviously a better outcome. These vaccines are designed to prevent hospitalization and severe illness and death, and it seems like they're doing their job.
Right. Protecting your health and also not stressing out our healthcare system. The other thing it underscores is the need to continue fighting the pandemic with things like not just vaccination, but social distancing and masking. It's not so complicated.
Treatments too.
Yeah, exactly. So, we need all the tools that are out there. All right, we're going to talk more about today's headlines when it comes to COVID. We'll do that in just a moment right here on Bloomberg Business Week. I'm Carol Masser, along with Tim Stanovic.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We are just about at the low of the day on the S&P 500 index. Stocks erased earlier gains. It has been a choppy session. Investors are assessing outlooks for earnings growth amid the potential for monetary policy tightening. S&P now lower by 11, down 0.2%. The Dow is down 148, down 0.4%. The Nasdaq Composite Index down 26, down 0.2%, while the Nasdaq 100 index now lower by 0.1%. 10-year up 13.30. 10-year yield 1.82%. We have got spot gold up 1.5%, 18.41 the ounce, while West Texas Intermediate crude oil is up 1.8%, 86.93 a barrel right now on WTI. So again, recapping, stocks are lower. Lots of earnings after the bell today, including Alcoa, United Airlines, Discover Financial Services, and Kinder Morgan. S&P down 11, down 0.2, 10-year yield 1.82%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks for the update. Lots of headlines when it comes to COVID and the pandemic. UK government, Tim, this is positive. They're lifting the restrictions it imposed in England back in December when the Omicron variant caused a record spike in infections that now show signs of easing. So a peak coming down. That's good.
We're certainly seeing that here in New York City, but we should note that cases are still soaring elsewhere in Europe. France reporting a record of nearly 465,000 new infections. Italy and Germany also registered all-time highs. Switzerland decided to extend a work-from-home order to the end of February as cases surge. So different stories playing out, but we're learning more about how quickly, hopefully, Omicron can peak.
Exactly. Fingers crossed. Dr. David Kim is back with us, Chief Executive of Physician Enterprise over at Providence Health. The first known U.S. case of COVID-19 was confirmed in Washington State at Providence Regional Medical Center in Everett. That was back in early 2020, January of 2020. They're a massive hospital system, and Dr. Kim joins us on the phone in Irvine, California. Dr. Kim, so glad to have you back with Tim and myself here on Bloomberg. How are you, and what are you seeing?
I'm doing well, and we are seeing a lot of what you are mentioning already, that COVID is, the Omicron is very infectious, and we're seeing it infect people much more easily than the previous variants, and we're seeing our hospitalizations rise as a result of that. Although the percentage of people that are winding up in the ICU is much lower relative to the previous surges with Omicron, and we're seeing milder disease.
Okay, so that's a lot of good news. What can you tell us? And forgive me, but I like to ask this to everybody who has an idea of what's going on in hospitals. Who is hospitalized right now, and are they vaccinated versus unvaccinated versus boosted? What can you tell us about who is actually getting very sick with COVID?
So there's different ways to answer that question. I would say who's getting hospitalized. We're seeing both vaccinated and unvaccinated people wind up in the hospital, and that is different with Omicron because we saw the Delta virus affected hospitalizations much less than people who are vaccinated. However, what we're seeing is that people who are unvaccinated being hospitalized are getting much sicker. So the percentage of people that are going to the ICU that do get very sick with Omicron tend to be people who have not been vaccinated or boosted.
Can you believe we're still talking about this and living this, Dr. Kim?
Yeah, a day is like a year these days, and depending on how you look at it, this is the third, fourth, or fifth surge we've had over the past 2 years. It has been a remarkable time in healthcare.
How do you balance normal healthcare with pandemic healthcare?
It's difficult, right? Not only are there constraints in the hospital because of the COVID patients, but there is a bit of a shift in the mindset of patients of when do they feel comfortable going to the hospital. And some of that has been positive in thinking through telehealth and the evolution of being able to get health care in new and novel ways. But some of it is concerning that people who need care aren't getting it. And there is a concern that once COVID is over, we're going to start seeing people who delayed care who are going to need care, and we're going to see more significant consequences of that.
Yeah, it's so interesting that you say that. I mean, a year ago, Carol remembers this. I hadn't been to the dentist in a year because of because of COVID, and I finally got an appointment with a physician today for a checkup, but it was so difficult to get an appointment because all these healthcare workers, so many of them have gotten sick, so many of them are overworked. So it seems like the system is kind of being pulled from both ends here, Doctor.
Oh, yeah. The staffing issue, I would say, is almost as much of a concern as the COVID itself. That so much of our constraints these days are because people are getting sick and they can't work, or they're just tired. And we see record numbers of people leaving healthcare as an employment option because of the past 2 years and the strains that COVID has put on the system and on the people who work in the system.
So what are the changes that need to be made? I mean, you're CEO of Physician Enterprise at Providence Health System. So you're making these decisions and you're looking closely at the data about people who are staying and people who are leaving. What needs to change in order to make sure that our healthcare workers in the U.S. do not get burned out?
I think that's the $1 million or the $1 billion question. We are really thinking through how do we keep hearts and minds engaged, and how do we keep people close to their initial calling of why they went into healthcare in the first place, and how we can keep healthcare from being a commoditized industry, but really be a place where people can fulfill the mission of why they chose a career to help others in their communities. And the more we can continue to bring that back into the why of why people came into healthcare and why they come to work every day, I think the more we can think about how we can sustain them through what is a very, very difficult time.
How do we do that, though? Like you said, you've got to figure it out. What are your thoughts on that? Is it a case of pay? Is it a case of respect? Is it? I don't love, but or I think about how you said commoditized. In terms of healthcare workers. I certainly don't think of that when I go to see somebody as like a commodity. I think about you're an expert. You had a lot of education. You've got you're taking care of our health.
Absolutely. We call those sacred encounters, and it is the reason why it's so fulfilling to be in healthcare, to have those moments of connection and relationship and intimacy almost with sharing your life and thinking about your health. How we do that, I think, is multiple fold. Some of it is through programmatic work around keeping people focused on the purpose and the mission of why. Some of it is around creating a work environment, whether that's compensation or cultural work or a sense of community that we can really get our arms around how to make people feel part of something and connected to the purpose of what we're trying to accomplish together.
Right.
And part of it is practical, is getting people to work shifts that don't burn them out, and so that they can find adequate time to rest, and equipping them with tools so that they can check out when they're home and not be thinking about work all the time.
All about wellness. That has been a big theme of this pandemic. Dr. Kim, David Kim, Chief Executive of Physician Enterprise at Providence Health, thank you so much. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It is Bloomberg Business Week. It's Wednesday already, Lemon.
I know, short week, Carol.
Nothing like a long holiday weekend.
Yeah, that's okay with me.
No, I agree. Like moving things along. Hey, coming up, moving along, and not necessarily in a good way, is what's going on with the ARC ETFs. She's all about Kathy Wood. We're talking about disruption, innovation, technology names, and that's so much of what's been getting hurt in this market right now.
Yeah, but get this. She's so close to erasing the gains versus the S&P 500 of 2020, that year where she just blew past the benchmark.
I'm just going to say, what goes up can come down and go up again.
All right, there it is. We'll have more on that in just a few minutes. In the meantime, a check of that trading day. Here's Charlie Pellet.
Thank you very much. Lows of the day right now for both the Dow and the S&P. You guys were talking about the ARC Innovation ETF. Right now, it is little changed, up less than 1/10%. But in the year-to-date column, yes, I realize this year is young, very young. But so far this year, the ARC Innovation ETF down by 18.6%. Right to the numbers, because as I said, we're at the lows of the day with the S&P down 15 now, a drop of 0.3%. NASDAQ down 45, down 0.3%. The Dow very much the low of the day, down 182 and dropping right now, down by 0.5%. 10 years up 14.30 seconds. 10-year yield right now 1.82%. Stocks erased earlier gains in a very choppy session. Investors are assessing the outlook for earnings growth amid the potential for monetary policy tightening. We've got gold advancing by 1.6%, 18.42 the ounce. Bitcoin down 1.4%, 41,788, while West Texas Intermediate crude oil is up 1.5%, 86.70 for a barrel of WTI. The Biden administration is preparing to release 400 million non-surgical N95 masks from the strategic national stockpile, with plans for Americans to be able to pick them up from tens of thousands of sites across the country beginning late next week. And on Bloomberg Surveillance this morning, Dr. Bhakti Hansati, the Associate Professor of Emergency Medicine at Johns Hopkins Bloomberg School of Public Health, was asked what she wants to know from the president about his handling of the pandemic.
And my biggest question right now is, I would congratulate him on the pivot here that he's made by making at-home tests available, the investments into science. But I would say, how are you going to sustain this, right? What is the long-term goal? The big issue that we faced and the crippling effects of the pandemic are due to the vulnerabilities in our health systems. So we've got a lot of Band-Aids, thank you very much, but how will you support the health system, and what is your legacy going to be when it comes to health systems resilience?
Dr. Bhakti Hansati of the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of the vaccine stocks that we track every day at this time. Pfizer down 0.7%. Its German partner BioNTech, its ADR is down another 2%. AstraZeneca's ADR is down 0.5%. Moderna, based in Cambridge, down 5.9%. J&J Johnson & Johnson up 0.1%. Recapping lows of the day with a 200-point drop right now for the Dow, down 0.6. S&P down 0.4, down 17. NASDAQ down 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. This is Bloomberg Business Week on this Wednesday. Carol Massar, Tim Stanovic. And Tim, the tech sell-off this year, it's had an impact on many investors, especially those who are bullish on the innovative, disruptive tech play. And that includes Kathy Wood of ARK Invest. Her tech-heavy ARK Innovation ETF, close, as you mentioned, you just mentioned, to wiping out its famous outperformance versus the S&P 500 index that really put her on everybody's map, certainly in the financial community and investment space.
Yeah, what a difference. Think about the conversation that we were having about the ARK Innovation ETF just a year ago right now, Carol. Let's continue that conversation with James Seyfert, ETF research analyst at Bloomberg Intelligence. He joins us on the phone from Summit, New Jersey. James, what specifically is it about the ARK Innovation ETF that has caused it to underperform massively in the last 14 months?
Well, I mean, for starters, if you look at ARK, what they're known for is that they have a very high correlation to unprofitable tech. So Kathy, a lot of people say she invests in growth at any price, which I guess is kind of somewhat, there's some tangible truth there, but not fully. But again, like I said, Goldman Sachs has a basket that they track of non-profitable tech names, and there's a high correlation to the way that Kathy invests. And part of the reason they've been hit so hard is rising rates and a few other things. But when these products, they're not profitable and they're expecting profits in a couple of years from now, or most of their profits become 4 or 5 years down the line. As rates rise, they're going to get hit harder, among many other things that have hurt non-profitable tech in the recent weeks.
Hey, and
Years,
just a quick clarification. I said 14 months. I should note the peak was last February, so it has been a shorter period of time, Carol.
Yeah, no, in terms of perspective and
Yeah.
understanding the move. Having said that, James, I do wonder and Tim and I have talked with Kathy, I've talked with her a lot since her beginning 7 years ago, I think it is now, 8 years ago. Do we need to look at Kathy Wood as kind of a venture capitalist to some degree, but, in the third or fourth funding round of companies? I mean, Tesla was a mega outperformance, and she was a believer when nobody else, in many ways, was. Is that how we need to kind of look at her investing strategy? There's going to be some big wins and some big losses, and when there's a tide turning, you're going to feel it on the downside.
Yeah, so a few things there. One, ironically, Kathy was actually the first client visit I ever did at Bloomberg. So she was the first client I ever went to visit right after she started these funds. And the other side of this is, so the way I like to look at it right now, I break it up into from the bottom in March 2020 when the pandemic started, when equity markets started rising. She went up 357% to February 21 when she hit the peak. If you're experienced that type of volatility and that type of outperformance, and you're investing, you have to know that it can come both ways. Like there is no free lunch in investing. So she's going to have volatility going up and going down no matter how you look at it. So I guess the way she certainly likes to tell people that's the way she views their investing. She views them as extending the private markets into the valuations into the public market. You can get to an argument about whether that's a viable investment strategy. There's plenty of people that think it's not. We tend to love the way that Kathy talks about investing, and we can talk a little bit more about what she's done to the ETF marketplace. But she certainly likes to pitch what you described as the way that they invest in public markets.
You're kind of preaching to the choir with me, I'm just going to say. And I think with Tim, I don't know how Tim feels, but I know certainly with me, I agree. But anyway, go, Tim, I know you have a question.
Yeah, James, how has she changed ETFs? And we just have about 45 seconds left.
I'll be really quick then. So the way we see ETFs is the flows, where the money is going is completely barbelled. It's either going into super cheap or it's going into super shiny. And she falls in that super shiny area. It's the core satellite approach to investing. And she's become extremely transparent with her active picks. Many active managers have come to the ETF space. We've seen a flood of active ETF issuers launching. We've seen a lot of copycats of Kathy. And people are just envious of their social media following, their social media interaction. There's a whole other things that she's bringing to the ecosystem that we think gives ARK staying power, but they have been hit, obviously, very hard since that February 2021 peak, down 50%,
right.
And seeing some significant outflows.
Well, and I would say all the copycats show that obviously she's onto something because everybody has kind of followed in her wake, if you will, in terms of her strategy. No doubt about it. James, thank you so much. Wish we had more time. James Hayford, he's ETF research analyst at Bloomberg Intelligence on the phone from Summit, New Jersey. We'll talk more, I'm sure.
Well, let's get a check of the latest world and national news with Nancy Lyons in Washington, D.C. Hey, Nance.
Thanks, Tim. Secretary of State Antony Blinken is voicing U.S. support for Ukrainian independence following a meeting with Ukraine's foreign minister and ahead of talks with European allies and a meeting Friday with the Russian foreign minister. Bloomberg's Irv Chapman has the latest from Washington.
Blinken said Ukraine is getting U.S. economic aid to resist Russian destabilization and military aid to resist an attack.
Russia has ratcheted up its threats and amassed nearly 100,000 forces on Ukraine's border, which it could double in relatively short order. Should Russia carry through with any aggressive intent and invade Ukraine, we'll provide additional material.
Blinken said he would refine a sanctions plan and other joint efforts with the Europeans to shore up the eastern flank. In Washington, Irv Chapman, Bloomberg Radio.
President Biden will reflect on his first year in office with an afternoon news conference at 4 p.m. Wall Street time today. We get a preview from Bloomberg government reporter Emily Wilkins.
Certainly, he can point to victories such as the bipartisan infrastructure bill that was passed, as well as, starting the vaccine rollout.
But Emily Wilkins reports the president has faced setbacks over his response to the Omicron variant, a stalled social spending agenda, and this week a voting rights bill that's likely to die in the Senate. Broadway theaters will dim their lights tonight to honor the late actor Sidney Poitier. He was a trailblazing actor, director, and cultural icon, and the first black man to win a Best Actor Oscar. The Broadway League, which is coordinating the one-minute tribute, says Poitier had an incredible impact on their art form. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Carol Massar, Tim Stenovic, right here on Bloomberg Business Week on this Wednesday. Hey, this story among our most read on the Bloomberg.
Yeah, it's about President Trump. It's just hard to kind of keep track of what he's challenging in terms of court and where things are. But I'll start with this. Okay, so the Trump fraud backed by, quote, significant evidence. This, according to the New York Attorney General. New York's AG asked a judge to order Donald Trump and two of his adult children to testify under oath as part of the state's civil probe into the family real estate business, saying that investigators have already uncovered a pattern of potential fraud.
Yeah, and apparently Letitia James, the state's top law enforcement officer, last night filing a motion to compel the former president, along with Donald Trump Jr. and Ivanka Trump, to hand over documents and answer questions about a series of valuations of key properties of the New York-based Trump organization. From what I understand, this case, and you're right, there's often a lot of litigation going on at different levels, but this has to do, I think, with how you value property when it comes to getting loans, and then maybe how you value property when it comes to the taxes on those properties. And I think there's different valuations, and that's at issue.
We also have to think about this in the context of not just the midterms and what happens to Republicans and Democrats in the midterms, but also 2024, because the civil investigation. Well, to what extent is Donald Trump tied to the Republican Party right now? And to what extent is he a kingmaker in the Republican Party?
Do you think it matters, the litigation that goes against him, that it will sway Republicans running or even Republicans voting?
It hasn't mattered up to now.
Right?
At all. But it could affect his potential for another run to the White House in 2024. The probe already helped lead to a separate criminal tax case against the Trump organization led by the Manhattan DA. It also could trigger additional criminal charges or a civil lawsuit by the state. So certainly a headache for the former president as he weighs a 2024 bid.
Yeah, exactly. You're right. There is things that you wonder, does it complicate if he is thinking for another run? All right. Something certainly we're going to keep on his radar, and I'm sure everybody in the political realm will do so as well. This is Bloomberg Business Week, and you're listening to Bloomberg Radio. All right. Something certainly we're going to keep on his radar, and I'm sure everybody in the political realm will do so as well. This is Bloomberg Business Week, and you're listening to Bloomberg Radio.
headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks lower across the board. The Dow, the S&P, NASDAQ are all declining. Stocks extending their pullback in a choppy session as investors assess outlooks for earnings growth amid the potential for monetary policy tightening. The S&P now lower by 11. We're off session lows, but still in the red, down about 0.3%. The Dow is down 155 points, down by about 0.4%. NASDAQ lower by 30, down 0.2%. 10-year up 14.30 10-year yield 1.82%. Spot gold up 1.6%, 18.42 the ounce, and West Texas Intermediate crude up 1.1%, 86.39 a barrel. Lots of earnings this morning. Morgan Stanley now up 2.1%. Bank of America up by 0.7%. Procter Gamble higher now by 3.8%, and United Healthcare, which did report this morning, up by 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. Lots of earnings to come. We'll be tracking them after the close. Hey, President Biden marking 1 year in office. We're going to hear from the president, I guess, in about an hour or so on that. In the meantime, in the upcoming issue of Bloomberg Business Week, Bloomberg News White House reporter Jenny Leonard writes about how 1 year in, Tim, the president finds himself boxed in when it comes to China.
Jenny Leonard is White House reporter for Bloomberg News. She joins us on the phone from Washington, D.C. Also joining us is Joel Weber, editor at Bloomberg Business Week. He joins us on the access line from Brooklyn. Joel, it's so interesting. At this point in the Trump administration, we'd probably be talking about a trade war, perhaps in the second year of the Trump administration. What exactly, though, is the policy that the Biden administration has toward China right now?
Well, that's the whole point of the story, my friend. So it's a really interesting moment because if I rewound the clock and we were at this moment, like you said, in the Trump administration, I think I had done multiple trade war covers already. And you know, here we are almost 1 year in, knocking on that door for the Biden administration. And I think, as Jenny's about to tell you, it looks pretty much like the same framework.
That's exactly what I was getting at, Joel.
Yeah, we haven't really even talked about trade forever. I just forgot all about it. So Jenny, remind us, where do things stand, and what is the Biden administration's policies on trade with China especially look like?
Yeah, you got it right, Joel. It does look a lot like, you know, where Trump left office, and a lot of Democrats fear that that's sort of a weakness going into the midterm elections, because China, of course, is something that energizes voters. Of course, it takes a backseat to COVID and the economy right now, but Biden hasn't really, in the first year in office, put his own stamp on China policy, and even his allies say, hey, you know, I think we know what you're hinting at wanting to do, but we don't really know for sure. So why don't you tell us? The Biden administration has been meticulously reviewing sort of what they inherited, right? If you guys remember, the trade war sort of ended with the phase one deal. They inherited that. Those negotiations are still ongoing. The Chinese have fallen short on their commitments, which we knew going into this administration. And there's really no timeline for when those negotiations should result in any sort of outcome. So to sum it up, I would say, you know, they really need to hit the gas to show something in the midterms, because Democrats are getting a little antsy that Republicans sense a little weakness here.
You know, Jenny, what's the right China policy? I mean, I talked with the Cisco CEO, Chuck Robbins, earlier. China, we know, so important to global companies, but what's the right balance when it's safe to say world leaders, U.S. leaders, don't agree with Chinese social policies, but they also don't want to lose access to the China's, you know, massive market potential that continues to be out there. So what is the right policy with China?
Yeah, I think you hit the nail on the head there on exactly what, you know, any government or any U.S. government is trying to balance, and where the different sort of voices come in when the different principles from agencies are discussing it, right? So you would have, you know, in thinking back to the Trump administration, you would, of course, have, you know, the more hawkish and dovish sides, you know, Treasury, USTR, Commerce, all these different entities that hear from different stakeholders. And I think the Biden administration is hearing exactly the same things, even as China has become more and more difficult to deal with, even as supposedly, there's less interest in investing in China. We're still seeing how intertwined the economies are. And I think you've seen at least the Commerce Secretary be very vocal in this Biden administration saying decoupling is not an option. That is not something that is possible. That is not something that's desirable. If anything, we need to slow down China as much as we can, but we need to run faster. And so that's been the Biden administration's focus, getting the American Rescue Plan passed, getting the infrastructure plan passed, and, of course, now working on their third big plan, the Build Back Better plan, which is stalled. So there isn't really anything in the immediate term, and definitely nothing that they can show in the bilateral sense,
Right.
where they say, hey, we're competing with China in a smarter way.
Jenny, we got to talk about the politics of this, because here we are. It's 2022, midterm elections coming up in November. We are expecting to hear from the president to really give a speech about his first year in office at 4 o'clock today, Wall Street time. How are Republicans, though, using the president's policy toward China, the administration's policy toward China, as a way to criticize him?
So I think Republicans are definitely, seizing the moment that Biden, for now, and they might prove us wrong, in 2 months, but for now, Biden has adopted and kept in place Trump's policies, which, of course, you remember the Republican Congress has pushed him there. There's a lot of, China hawks in Congress that are maybe gearing up for presidential runs themselves in 2024, that are running for re-election to their Senate seats or House seats in 2022. Economy even more when you think about tariffs, right? So currently we have tariffs in place. Everyone knows that, taking off tariffs will probably leave Biden even more vulnerable to criticism from Republicans. But adding more tariffs to it, if that is your enforcement tool, is maybe not something they want to go down. It's not really a path they want to, go down. And so Republicans see this current reality for Biden and, are probably enjoying watching him sort of figure out his way out of this box.
Okay, we spent a lot of time learning a cast of characters in the Trump administration who would love to tip their cards and talk about how negotiations were going. We have heard nothing about who's leading the charge on the American side in the Biden administration. Who are the players, real quick, Jenny?
Yeah, certainly a different cast of characters, and they're way less likely to tell us how it's going. It's the chief negotiator here is Catherine Tai, the U.S. Trade Representative. She's been in touch with the Chinese only twice in the first year in office. Her deputy, Sarah Bianchi, who handles China issues, has been in touch with the Chinese also a couple times, although the agency decided not to disclose that. So interesting there. And then, of course, right. Treasury Secretary Yellen and Commerce Secretary are also key players here.
Yeah, a lot of top names there in the administration. Hey, thanks so much. Bloomberg News White House reporter Jenny Leonard from D.C., of course, along with Bloomberg Business Week editor Jill Weber from Brooklyn. That story in the upcoming issue of Bloomberg Business Week magazine. It's online on the Bloomberg. That magazine out later this week.
Down to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close. Just 60 minutes left, friends, in the trading session. Caroline Hyde, Romaine Bostick, Taylor Riggs, joined now by our colleague Tim Stenovic. As we welcome cross audiences, we go TV, radio, YouTube to look at what is quite a topsy-turvy day. Choppy day of trading. We're now down almost in that correction level once again with the NASDAQ.
Yeah, choppy is the perfect way to describe it. Stock's really searching for direction. A different story than yesterday, but I do think on an index level, it really hides some of the upbeat earnings that we got from companies today. Morgan Stanley, United Health Group, Procter Gamble too. So if you got to like kind of pull the hood off a little bit to really get the story today.
Yeah, able to pass on some of that inflationary bucket would seem. Meanwhile, let's look at what is a pretty, if you look at the face of it, muted day of trade, down by about 0.1%, 7 points lower on the S&P 500. We're 22 points lower on the NASDAQ, but that brings us within a whisper of that all-important 10% off the highs that we saw previously on the NASDAQ. The Russell really feeling the pain today. The small caps get beaten up the most, off by 0.7%, 15 points lower, and the Dow also turning negative to the tune of 120 points.
Like a careless whisper. The late, great economist George Michael.
You're on your own. He was a man of many talents. Economy can be put to it too, but
I'm sure my wife laughed at that joke at all.
In terms of breadth, should I save us from yourself?
She'll message in a moment to tell us that she didn't.
In terms of breadth, it does look a little bit better than we did yesterday. That we would know for the year, financials now are only 1% positive. Energy, of course, the clear winner. But on an intraday basis, the story does indeed look a little bit more 50-50. You have staples and utilities, perhaps maybe some of the defensive sectors. The top two green bars there, you're up 1 to 1.25%. But down at the bottom again, it's consumer discretionary, it's industrials, it's financial. So much of that reflationary trade and that rotation is certainly unwinding today as well, with financials down at 1% at the bottom.
Yeah, and the breadth, though, is still pretty weak here. Obviously, there's a lot of cherry picking right now, people trying to find those companies that are going to be resilient. You're seeing Microsoft finally get a bid. Remember, this was an interesting sell-off that we had at the start of the year on this name, a name that I think that a lot of people were sort of scratching their heads on, given that it is probably falls more into the high-quality camp, certainly when you look at the multiples there. Procter & Gamble, another interesting story in that same vein here, are actually raising prices, apparently passing some of those costs on to consumers, and says that it's capable of doing it. That's helping to bolster profitability. It's helping to bolster margins. You're seeing those shares up today, up about 4%. Meanwhile, the rest of the tech sector is struggling. A lot of those chip stocks continue to be weak. Applied Materials down for a second day here, down 5% right now. And some of the bank stocks, a real mixed bag right now for some of these bank stocks. Morgan Stanley higher on the day, but of course we talk about that sell-off we had in JP Morgan. Now that second tier of lenders out there. U.S. Bancorp down about 7% on the day. A lot of other names in that peer group also lower as well.
Yeah, also what's lower, maybe this is a positive story, the amount of negative yielding debt that's out there, shrinking by half from its 2020 peak. We are now down to a measly 9 trillion worth of debt that is currently turning negative. But remember, Germany at one point, actually the yields turned positive for the first time that we've seen dating back for years. So we are starting to see a perhaps normalization. It was since May 2019 we haven't seen Germany earn you any money on your holdings of government debt.
Okay, so we are kicking off earnings season. We're getting earnings. We had earnings before the bell. We have them after the bell. Earlier today, Carol spoke to Cisco CEO Chuck Robbins. He weighed in on wage inflation. That inflation is a term, obviously, we're hearing a lot from companies. This was during an exclusive interview as part of Bloomberg's The Year Ahead. Check out what he had to say.
Wage inflation doesn't go back. I mean, I joke with our team. I can't remember an employee when things get, when inflation subsides, they come and say, I'd like to get part of my salary back. So, I mean, whatever we're having to do on that front will stay with us forever.
That was, of course, Chuck Robbins weighing in on wage inflation during an exclusive interview as part of Bloomberg's The Year Ahead Award, the Cisco CEO. I love this one, Romaine. You mentioned Procter & Gamble. Right. What did they tell us this morning? Customers are willing to pay higher prices for things. They're okay. They have the cash to do that right now.
Well, yeah, that's debatable if they have the cash, but they're certainly willing to do that. And we've heard anecdotally from other companies as well that some of the price hikes that they were initially reticent to do, that when they finally did them, customers were willing to take that. I guess the question, though, Tim, becomes, whether there are certain companies out there where the customers will balk. There are certain items that, look, you're going to continue buying because that's what you want to buy.
Sorry, yeah, diapers. When do I have a
Of
choice
course.
on whether I buy diapers or not? And the price point keeps going higher.
They got you.
And this brings you back, I hate to say it, to the Federal Reserve. I was reading our notes out from our Bloomberg economics team today saying that the risk is clearly tilted towards more hikes than fewer. Now looking at 5 hikes this year, starting in March, as the Fed does really realize that inflation isn't going back down to 2%, at least anytime soon.
And another thing to Tim's point, or what he was referring to with regards to what Chuck Robbins was saying with regards to the idea that wages aren't going to come back down, there are a lot of other inflationary pressures that aren't going to come back down. And even if they do, most people say the baseline is going to be a lot higher than where it was pre-pandemic, and that's something we're going to have to get used to.
Right, and I think you have to also think about this from the variability element here, right? Wages are not variable to the extent that they can lower them, but something like, fuel prices, we see a lot of volatility there. So that can change quarter to quarter. Wages, though, they're sticky.
Right. Well, that's why you've seen some companies doing the bonus route. I mean, we were talking, what was it, Goldman?
Great
one
point.
of the big banks paying out some pretty big bonuses. But they were bonuses, one-time payments here, and don't necessarily expect that a year from now.
But not on the junior end. JP Morgan getting higher base salaries there. And maybe, they, of course, are the sort of people that can swallow some of these price point hikes. But not everyone has the luxury thereof doing, particularly when you're looking at gas at the pump going ever higher. Oil prices, once again, what is it, at a 7-year high at the moment in terms of oil. So there's another read on your inflationary pressure.
The notes that we've been reading say it's a matter of when, not if, for $100 a barrel oil. Tim, I'll just quickly tease, I know that what we're doing in TV in about 25 minutes, bringing it back to earnings, we're going to talk to Gina Martin-Adams, her excellent analysis on the impact this has on corporations. As you mentioned, Procter Gamble passing those costs on to the consumer versus some of the hits, and at least within some of the financials as well, talking about some of that sticky wage inflation and the impact, of course, on fundamentals and the impact on some of these corporations. Yeah,
we also continue to hear from airlines, and pricing pressure is certainly there for airlines. I don't know about you guys, but when I flew recently, and everyone I've talked to, and we see this in the TSA data as well, those seats have been empty. When are people returning to the skies, and what type of pricing pressure do the airlines actually have?
Because that is such actually land right now.
Yes.
Because I keep hearing about this big 5G thing. And,
I got to tell you.
And the FAA puts out a statement kind of applauding themselves for that 62% of flights are cleared to fly. And I thought, shouldn't it be 100?
I'd be lying to you if I wasn't thinking about it as I was landing at JFK on Monday afternoon.
Well, good thing you came back before the 5G thing.
I kept my phone in airplane mode, don't worry.
This is such a deeply slow car crash of a story.
Yeah.
How it is
Could you
shocking
have used a different
2018.
metaphor than car crash, please?
A slow fiasco.
Okay,
There's
fiasco.
a slightly gentler tone.
All right, thank you. Hey, that is going to do it for now. We're going to be back again together live on TV, radio, and YouTube at 4 p.m. for our Beyond the Bell coverage when we take you through today's market close. We'll see you all in just a few minutes.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
You're listening to Bloomberg Business Week. Carol Masser along with Tim Stenovic. Were you talking about car crashes?
Yeah,
what
we
was
were talking.
That about?
Yeah, because Caroline was talking about the 5G fiasco with airlines, and I'm thinking about it's a good metaphor, right?
Yeah.
But let's not think about slow-moving crashes.
God,
I totally was thinking about it. Absolutely.
When you were flying?
I was flying, yeah. But I thought of what you said a couple weeks ago. I think we were speaking to one of our BI analysts, and you asked him if you could actually use your phone on a plane and take it out of airplane mode.
Come on, we've all done it, right?
Of course
Like,
we have.
I either have forgotten and then I'm thinking, oh my God, I'm going to crash the plane, or I'm like, let's see what happens. No, I'm just
Now
kidding.
the feds are going to show up to your house, Carol.
Exactly. After that interview. No, listen, this is not something to joke about, and we're trying to figure it out. Obviously, the airline industry is worried about it.
They are, and what's interesting, I think, did we talk about this yesterday, or was this from today? I'm getting the days mixed up already, even though it's a short week. Europe is not having an issue with this. So
I think it's today, right? But aren't they? There's foreign airlines that are restricting some of their flights here into the United States.
Yeah, exactly.
So they're obviously
But I mean,
concerned.
Europe, as they've rolled out 5G, hasn't been an issue.
So I don't.
Yeah, I don't know.
Help me, everybody.
This is I maybe because I'm not a flyer. I don't cover the spectrum very closely, but it's a little above my pay grade, Carol.
Okay. Well, let's
I'll
all
be
get
honest.
together. Let's
Yeah.
just figure it out. Is it a worry? Is it a concern? And let's just figure it out. All right, you're listening to Bloomberg Business Week. Coming up, though, still, we're going to talk about those big bank earnings, right? We have really kind of finished up when it comes to the big banks, but we did hear from Morgan Stanley, B of A. So
yeah, wrapping those up. We're going to speak to Anton Schutz over at Menden Capital Advisors. Looking forward to that conversation.
All right. In the meantime, let's get back to world and national news. Nancy Lyons on it for us on this Wednesday. She's in our DC newsroom. Hey, Nance.
Thanks, Carol. Tomorrow marks the one-year anniversary of President Biden taking office, and today he'll reflect on the past year when he holds a news conference in about an hour. He's expected to be asked about inflation and his Build Back Better agenda, which is stalled. U.S. Secretary of State Antony Blinken has been meeting today with Ukraine's foreign minister to discuss Russian aggression along the border. He says the U.S. has already provided equipment to Ukraine, but is ready to provide more if needed.
Should Russia carry through with any aggressive intent and renew its aggression and invade Ukraine, we'll provide additional material beyond that is already in the pipeline.
Blinken says the U.S. is willing to give Russia some time to fully consider the ramifications of a possible invasion into Ukraine. Airlines around the world are adjusting their schedules and aircraft deployments for flights to the U.S. today over fears of 5G rollout by AT&T and Verizon near American airports could interfere with key safety systems. Regulators say 62% of the fleet is now approved to perform low-visibility landings. The 5G system has been in place without issues in Europe, but Bloomberg's Sid Phillips says the airlines argue there is a difference.
The 5G that's in Europe is obviously a different frequency than there is in the US. And it's also lower power, as well as the signals, the cell phone antenna point downwards instead of upwards. And essentially they're saying that operationally, that makes things much more difficult in the US than it does in other places.
Sid Phillips says 777 aircraft are of major concern due to their radar altimeters, which track altitude and allow landings in bad weather. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You are listening to Bloomberg Business Week. Carol Masser along with Tim Stenovic. A lot of headlines from the big bank community over the past week. A lot of it has to do with compensation, Tim.
Yeah, it does. Not a bad time to be a junior banker.
No, JP Morgan Chase raising the pay for its junior bankers again. It's not the first time.
Junior
again.
bankers. Remember, we're talking first-year investment banking analysts here. They're going to start.
These are the guys who have no life, right?
Yeah, I mean, I haven't done it. And look, you don't see me doing it. Okay. Pay is going to start at $110,000. That's up from the boost to $100,000 that was announced back in June. This, according to a person familiar with the matter. Then that second year analyst pay, that comes to $125,000 a year. Third year to $135,000. The markets unit will also see similar jumps, Carol.
Yeah, the raises will apply internationally and pay for associates who will also be increased. So associates also seeing that. This is according to those in the know. Spokesman for JP Morgan not immediately responding to a request, but this has been out there in terms of report. But, this, again, we've been hearing from all of the big banks. Citi is increasing pay for junior investment bankers. We heard that after their division posted its best performance on record last year. And Bloomberg reported that last week it increased base salaries for first-year analysts to $110,000, while those in their second and third years will now receive $125,000. We have talked about the big deal with Microsoft and Activision. M&A was a record year last year. It was on fire. The deals continue. You don't want to lose those bankers. That's a big contributor to the top and bottom line for these big banks.
That's so true. But one thing I'm also thinking about, Carol, is the Bloomberg 50 from Bloomberg Business Week. And one of the 50 was the first-year analysts who detailed those revelations about Goldman Sachs' workplace culture. That went viral in March. That led the company and other financial institutions to raise pay to a minimum of $100,000 a year and then lighten the workload. We can't forget what happened over the last year.
And it wasn't about pay. It was about, I want some life. So I do wonder, I'd love to talk with those investment bankers and say, did you get more money? Are you happier?
Are you working less?
Are you working less?
But there's more deals.
Exactly. But pay and compensation definitely going up for the banking community. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Choppy Wednesday. Let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks are trading down now. Like you said, in choppy trade. Dow's currently down 107 points. S&P's dropped 7, and the NASDAQ is still down by 35. The U.S. 10-year yield at 1.83%. Gold is up 29. Oil is also trading higher, but Bitcoin is down by 1.4%. Among the main 11 S&P sectors, consumer staples led. Financials and consumer discretionary were under pressure. And leaders to the upside in the Dow, Procter Gamble, and Microsoft, while Caterpillar and Boeing led to the downside. After earnings, Bank of America rose 1.1%. Morgan Stanley gained 2.5%. And in other news, SoFi surged as much as 19% after it was granted conditional approval to become a U.S. bank. Wrapping things up, Alcoa and United Airlines report after the bell. Live from the First Word breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg Time Squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we had a bunch of big banks report over the last week. And Tim, we had Morgan and B of A today coming out with numbers.
Yeah, we've already heard from Goldman Sachs, and we've heard from JP Morgan Chase. We're also starting to hear from the regional banks as well.
Right, and I know that's something that's certainly always on the radar of our next guest. Anton Schutz is back with us. He's President and Chief Investment Officer at Menden Capital Advisors on the phone in Florida. Anton, good to have you here. Happy New Year. How are you?
I'm doing well, thanks. How about yourself?
Doing okay. Taking one day at a time, as we do. Good to hear, though, and kind of get into earnings, because I really love when we start to hear, certainly from the financials and from leaders overall, the big banks. How do you see it? Not only the numbers today, but the numbers we got last week. How are the banks doing? I mean, compensation is one of those things, increased costs showing up big time.
Well, it's compensation, it's technology, and, it's a real, difference in strategy between a number of these companies. If you think about, JP Morgan investing $12 billion in financial technology, right? I mean, that's more than all the disruptors combined, probably, right? Investing in new innovation and research. I mean, they certainly can win the game, but, it comes at a cost. It's amazing they can earn the amount of money they earn while spending $12 billion.
Yeah, true. Anton, what does that look like? Because when we talk to fintech companies, for example, I talked to Chris Britt, the CEO of Chime yesterday. It's a $25 billion fintech. It doesn't call itself a bank, though it offers banking services. It's just got a massive private market valuation. Is the idea for JP Morgan to invest in products like that? Because help me understand what these fintech investments are.
Well, I mean, they're obviously trying to make themselves more efficient. They're trying to improve their delivery process. They're trying to improve their ability to provide compliance, which is, it's very expensive. And if you look at the core processors, the Fiserv, Jack Henry, the FISs, those are very expensive cores, and, all the banks use them. And at the end of the day, if you can find a way to deliver all of your products that even exist to your customers, right, cheaper, then you get to eliminate some of those very expensive human capital costs that are there today. You can't get people to come to work anyway, and obviously, if you can get people to come to work, you've got to pay them more. So part of the money spent on the innovation is not just in new products, really. It's in how do you deliver those products, and it's how you provide compliance for that delivery. And I think that we'll learn a lot more about that compliance as the regulators get more involved in unregulated fintechs. Right, the banks are very regulated. We just saw SoFi this morning. It's going to become a lot more regulated. Now, it's got approval to become a bank. And one of the first things regulators said, well, wait a second, on the crypto side, you guys have got to back off a bit. We've got to get to understand you better as a bank.
Anton, in terms of the financial space, and you've been investing in these types of names for a long time, you like often the regional space, but is fintech and the newer upstarts starting to garner any more of your attention, or potentially some of your thoughts about, well, what we should be putting and committing money there?
Well, I really like banks that have fintech embedded in them. So you talk about these private market valuations, but obviously some of the public valuations, and a lot of those companies don't earn money. And I'm a traditional value investor. Of course, I'm always looking for, what creates value. And if I can find banks that have fintech embedded in them, or managements that are leaning forward that are going to create a better mousetrap, for instance, in New York, a New York community that's really embraced, fintech and blockchain technology, or a Signature Bank, also headquartered in New York, that's done a lot of it, or Silvergate, or Triumph, or we've talked about Live Oak Bank before. These banks all have fintech embedded in them. They're all using it to deliver. They're investing in it, and they're part of the future. And I think as we start looking at that stable coins and who's going to have that ability to really get approval from the regulators, it's going to be the banking system.
Is it going to be more regional banks, or the big banks?
I think the big banks will eventually get
because it does seem like the regional banks are leading in that right now.
They are. It's part of that's the decision trade, right? I mean, JP Morgan's a really large organization. They literally, I think, said they invested 100 fintechs last year. But parsing them, getting them, to the market, getting them distributed through that very large organization, it's harder to do that. If you're a smaller entity, it's a lot faster to bring something to market, and you can test things out with some customers and get it going without a very large bureaucracy, to say the least. And obviously, some of those banks are better at getting things to market, but it's a lot easier if you're a multi-billion-dollar bank rather than a multi-trillion-dollar bank.
Anton, what do you think the banking environment's going to be like for some of the names that you hold on to, whether it's a Live Oak, whether it's an Equity Bank Shares, First Bank Shares? I mean, it's going to be a better environment because of a higher rates that we're starting to see certainly come through the system. How do you see it?
Well, higher rates, everybody always talks about how great those are for banks. And yes, absolutely. A good yield curve, higher, short-term interest rates are good for almost all banks. And you've got to raise rates quite a bit before you start creating credit issues out there, which is obviously the other side of that. But I think the thing that's really important here is there was so much stimulus put into their customers' hands that loan growth really didn't exist a ton other than some of those faster-growing markets like Tennessee or Texas or Florida nationally. So now you've got the loan growth coming back, right? You've seen some good loan growth numbers out there across the guys that have reported, and I think that's really critical. So, yeah, higher rates matter and will matter, and they're not all in the estimates yet. But loan growth is really what drives earnings here.
Right. All right. So we'll be watching out for that. Anton, thank you so much. We really always appreciate the perspective you have and the informed perspective. Anton Schutz, President and Chief Investment Officer at Menden Capital Advisors, on the phone in Florida. You're listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You're listening to Bloomberg Business Week on this Wednesday. Carol Master along with Tim Stanovic. And coming up, we've got the chart of the day.
Yeah, we've got the chart of the day. Kriti Gupta from Bloomberg Markets is going to be joining us in just a minute. It's all about banks and yields.
Well, that makes sense.
Two things that we've been talking about, right?
Which is something we just talked about.
Exactly, with Anton Schutz.
Yeah.
We're going to have that in just a few minutes. In the meantime, check of the trading day as we get close to the close of trading. Hey there, Charlie Pellet.
Well, I thank you very much, Tim, and happy Wednesday. We've got 28 minutes to go until that closing bell clangs on Wall Street. Right now, looking at lows of the session for the S&P 500 index. We're down 17. Right to the numbers. We'll give you the why in a moment here. With the S&P down 0.4%. The Dow tumbling 189 points, close to session lows, down 0.5. NASDAQ down 79, drop there of 0.6%. 10-year up 12.30 seconds. 10-year yield 1.83%. Got to keep it locked into Bloomberg Radio to see how things shake out and, of course, how Asian markets will react tonight. Stocks so lower in choppy trading. Investors are assessing outlooks for earnings growth amid the potential for monetary policy tightening. At 10-year again, 1.83%. Spot gold up 1.6%. 18.42 the ounce. West Texas Intermediate crude 7-year high up by 1.5%. 86.67 on WTI. Natural gas, though, down 6%, 402 per million BTUs. The Biden administration is preparing to release 400 million non-surgical N95 masks from the Strategic National Stockpile, with plans for Americans to be able to pick them up from tens of thousands of sites across the country beginning late next week. And on Bloomberg Surveillance this morning, Dr. Bhakti Hansati, Associate Professor of Emergency Medicine at the Johns Hopkins Bloomberg School of Public Health, was asked what she would like to hear from the president about his handling of the pandemic.
I wanted to say, let's talk about how insurance companies support individuals who are unable to access insurance, or unable to access health services. How do we support increase infrastructure when it comes to primary health care or community-based health services? How do we, in many ways, decentralize access to care to make sure it's more equitable?
Dr. Bhakti Hansati with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of the vaccine stocks we follow on a regular basis, all lower right now. We have got Pfizer down 0.6%. Its German partner BioNTech, its ADRs down 3.6%. AstraZeneca's ADRs down 0.4%. Moderna's tumbling 7% right now. J&J Johnson & Johnson down less than 0.1%. Recapping, 10-year yield 1.83%. S&P down 22, a drop of 0.5. The Dow now lower by 210, down 0.6. And that's a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. As we do each day at this time, we check in with Kriti Gupta, Bloomberg Markets correspondent, for her chart of the day. Kriti, your chart of the day, it's all about frenemies. We're talking banks and yields. What's going on?
Yeah. Did you like my chart headline, Tim?
I did. Frenemies. It's one of my favorite terms. You know, and there are a lot of companies that are frenemies, right?
Especially in the tech space, right?
There totally are, but to me, I kind of went with the classic play that is super relevant right now. We're coming off of earnings from the big banks. We're also talking about rising rates, and traditionally that's a play that goes hand in hand, right? Kind of like best friends, except right now the correlation between the two is actually negative. So that's my chart of the day, the 10-day correlation between banks all around the world and the 10-year Treasury yield, essentially telling you that, yes, in theory, rising rates should mean better kind of profit margins for banks that are lending. But right now, because you're seeing these rates increase so quickly, or the bets, I should say, on what the Federal Reserve is going to do increase so quickly, it's actually having the opposite effect on banks. Essentially, the idea that not only do they have these kind of wage compensations that they have to make in response to this inflation, but it could also crimp loan demand in the long term. So essentially, those best friends perhaps frenemies just for the short term.
It's what we just talked about with Anton Schutz, because he said initially that yield story, positive for banks, but then you're right, it could turn into crimping demand, and that's a problem. He said, though, you've really got to watch loan demand, loan creation, right, as a really good sign of health and growth within the industry.
Right. And I mean, we did hear from Bank of America today that their loan growth numbers are looking good. And as you start to see the fiscal stimulus have less in effect, less savings in effect, more small businesses, even more corporate America is going to want to borrow more to kind of make up for that lost income that you got from that fiscal stimulus. That being said, if you have higher rates, the incentive to do that is much, much harder.
Okay, I'm going to go with the Carol question here for the last one before we talk about what you got your eye on.
Don't do it, Tim.
Well, I'm just curious. Why did you choose? Obviously, because we're thinking about higher rates, and we're also talking about bank earnings with banks wrapping them up. But why did you choose this one today?
Yeah, well, I think one of the big questions that I've been grappling with, and I think investors have been grappling with too, is that you're seeing Treasury sell off, you're seeing the stock market sell off, you're seeing oil kind of go fast and furious, but you're hearing about inflation. How do you actually play it in the market? So I just went back and I kind of went through the classic plays in the past, really in the past 10 years, your value trade, your growth trade, what's actually working right now. And banks, well, it's a trade that's been working in the last month until earnings came around and you have these more aggressive bets on just how quickly the Fed is going to tighten, and that's really what caught my eye.
All right. Well, let's talk about what caught your eye from a perspective of stories this afternoon. We've talked a lot about zero COVID in China, but it's getting increasingly difficult for the country because of Omicron and how much it spreads and how easily it spreads.
Yeah, and this is a story that, first off, it's our big take. I recommend everyone check it out on Bloomberg.com or on the terminal. It's fascinating to me because we talk about these supply chain concerns, we talk about inflation, but a lot of where, especially for the United States, a lot of where things are made are in China, and a lot of our supply chains extend into China. So their zero COVID policy has a very direct impact on not just the United States, but the average American and the goods that are available to them and at the prices that they want them. So this is really important when we talk about the zero COVID policy, because as you have China really unable to grapple with, say, the Omicron variant or new cases, they're going to be shutting down cities, they're going to be shutting down ports, and that's going to have a ripple effect on supply chains coming back all the way to right here in the United States.
To tie it to a conversation I had earlier today with the Cisco CEO, Chuck Robbins, I know I've been referencing him a lot, but we covered a lot. He has seen a lot of different cycles. He's a major tech company or runs a major tech company, but he talked about, what we saw during the pandemic and these supply chain disruptions, how it is really, has shed a lot of attention about how we need to, as leaders, something, you took for granted that our supply chains would be okay, and that you're really rethinking it about, whether it's localizing them or what have you, but really rethinking them.
Yeah, and I think that's a great point, because this is a conversation that we used to have pre-pandemic when we were talking about the trade war, really bringing some of that production closer to home, whether that's to Canada, whether that's to Mexico, whether that's right here on U.S. domestic soil. And now that conversation has been amplified, of course, with these supply chain concerns, especially going into Asia.
A major rethink. Good stuff. Kriti Gupta, Bloomberg Markets correspondent at Bloomberg News, on the phone in New York City.
Let's head to Washington, D.C. for a check of the latest world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. President Biden will be holding a news conference within the hour. He is expected to take tough questions on the economy and the pandemic. Bloomberg's Washington correspondent Joe Matthew, who also hosts Bloomberg Sound On, says the world will be watching this one.
We're going to be looking very closely at his demeanor, his body language, and the way he navigates between topics, the way he handles reporters. There's new polling data out this morning from Morning Consult that shows majorities are questioning this president's ability to lead effectively, to communicate effectively, and to make good on his promises.
Bloomberg's Joe Matthew. You can listen to the president's news conference here on Bloomberg Radio at 4 p.m. Wall Street time. One issue the White House is addressing is the supply chain. And as Bloomberg's Nathan Hager reports, more funds are going toward resolving the problem.
The U.S. Army Corps of Engineers plans to invest more than $14 billion to upgrade ports and waterways and help coastal communities deal with extreme weather. The White House says the Army Corps will tackle more than 500 projects across 52 states and territories, with much of that money coming from the bipartisan infrastructure law. The Biden administration has been looking to tackle logistics bottlenecks that have fed the hottest inflation in the U.S. in nearly 4 decades. In Washington, I'm Nathan Hager, Bloomberg Radio.
Rap artist Cardi B is going to step in to help pay for the funerals of the 17 victims of the fire earlier this month in New York City. The Bronx native says when she heard about it, she knew she had to do something. 8 children are among those killed in the blaze, which fire officials believe started with a space heater. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. All right, Tim Stenovec, how much did you guys talk about Bitcoin on your
Not
show?
that much today, actually.
Really? What did you talk about?
We talked about airlines and 5G. That was
okay,
really
smart.
interesting. And then we led the show with a look at the high-flying tech stocks.
Okay,
Yeah,
which makes sense.
Yeah, with the NASDAQ in correction, earlier in the day in correction territory, down 10% from the November highs. But we did mention Bitcoin at the top of the show. It's interesting because it's kind of sitting pretty, I don't want to say sitting pretty, but kind of sitting at a $42,000 level. It hasn't really gone below
Great
that
entry
40,000
point, right?
level. That's what some people say. I don't know.
That's what some people say.
I don't know. I mean, here, who am I to give that advice? But Katie Greifeld, my co-anchor on Quick Take Stock, has a new story out today talking about one of the biggest casualties of the cryptocurrency sell-off, the Grayscale Bitcoin Trust. Okay, the ticker, Carol, is GBTC. It's plunged nearly 17% so far this year. It's outpaced Bitcoin's close to 9% decline.
Yeah, it's interesting to do that comparison. So as a result, GBTC's price closing 26.5% below the value of the Bitcoin it holds on Tuesday. That was yesterday, of course, widening GBTC's so-called discount to record levels, according to our Bloomberg data. Like, you look at this, right? Like, you think about, okay, here's the underlying asset. Why is it down more?
Okay, so here's the answer. The trust doesn't allow for share redemptions in the same manner as an ETF, meaning that the supply of shares can't be created and destroyed with shifting demand. As a result, the shares tumbled deeply as investors pulled sharply back from cryptocurrencies. That exacerbated the discount in the share price.
This is why you really have to understand the investment you're investing in, right?
Yeah, because it's not an ETF.
Correct. And so, if you think or just believe that it's going to invest based on the underlying asset, it's not necessarily the case.
Well, Katie writes that Grayscale Investment LLC applied to the SEC in October to convert GBTC to an ETF. Yeah, it's expected to quickly repair that discount. Regulators, though, they have yet to approve a physically backed Bitcoin fund.
Yeah, and this is something we've talked about a lot. And certainly with the folks over there at Grayscale. All right, you're listening to Bloomberg Business Week. Carol Masser along with Tim Stenovec. Coming up next, we're talking stocks. This is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. Choppy session, stocks at or near session lows right now. Stocks falling toward the lows of the day as investors assess outlooks for earnings growth amid the potential for monetary policy tightening. The rout has pushed NASDAQ over the threshold into correction territory. S&P down now by 22 points, down 0.5%. NASDAQ down 89, drop there of 0.6%. The Dow again close to session lows, down 193, down by 0.6%. 10-year up 11.30 seconds, 10-year yield 1.83%. Spot gold up 1.6%, 18.42 the ounce, and crude pushing higher, up at a 7-year high, up by 1.3%, 86.53 for a barrel of WTI. Among the companies reporting earnings after the closing bell, Alcoa, United, Discover Financial, and Kinder Morgan. Briefly, sources tell Bloomberg PepsiCo and Beyond Meat are planning a vegan jerky snack as the first product in their joint venture. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
The recent hostage crisis at a Texas synagogue is a reminder that anti-Semitism is a growing threat. The idea that lawmakers would block any efforts to fight it is shameful. Yet that's arguably what Senate Republicans are doing. In July, Joe Biden nominated the renowned Holocaust scholar, Deborah Lipstadt, to helm the State Department's Office for Combating Anti-Semitism. Her nomination has remained stalled ever since. Republicans on the Foreign Relations Committee appear piqued by a tweet Lipstadt wrote in March, criticizing a senator in their party. But Lipstadt is no mere partisan, having chided lawmakers on the left as well as the right. And no one doubts her qualifications. An author of 6 books on anti-Semitism and the Holocaust, she would bring unparalleled expertise and gravitas to the position. Republicans have delayed long enough. They should let Lipstadt's nomination move to a vote. This editorial was written by the Bloomberg Opinion editorial board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
We are driving to the close. Just about 10 minutes left in today's trading session. And Tim, as Charlie mentioned, we are near our lows of the session on those major equity averages. I'm curious what our next guest has to say, because he runs a fund, the Rational Dynamic Brands Fund. We've talked with him before, and over the last 3 years, it's up on average 22% annually, putting that fund in the 89th percentile, according to Bloomberg data. So it's been an outperformer.
We're talking about Eric Clark, portfolio manager at Rational Dynamic Brands Fund. He joins us now on the phone once again from San Diego. Eric, how are you?
I'm good, Tim and Carol. How are you?
We're doing well. Look, the story today obviously is about what's happening on the NASDAQ composite, down in correction territory, more than 10% below its peak from November 19th of last year. How are you reading into this?
You know, I think there's that short-term noise surrounding interest rates and the Fed and how aggressive they're going to be with rate increases, as well as withdrawing some accommodation and maybe even outright selling of bonds. You know, I have my own personal view that the Fed is not willing to tank the markets in the economy just to try to reduce inflation. So I think they're more trying to talk it down. But that has an effect on high multiple stocks, and it's been a very popular part of the market. And so I just see that de-risking happening until there's some realization that the Fed's probably not going to be as aggressive, and people are much more wrong-footed about where their positionings are. But it's certainly been a painful, couple of months for sure for high beta stocks.
All right. So what does it mean, Eric, for some of the names in your portfolio? We've often talked about investments that you've got in an Alphabet, a Microsoft, a Netflix, an Apple, and Amazon, and more. A lot of those well-known tech names, that have certainly provided support to the equity markets over the last couple of years. You still like them?
I do. I absolutely do. I mean, we have certainly shifted up the portfolio in quality. Big profits, lots of free cash flow, great balance sheets, the ability to buy back stock, add to the dividend growth, those kind of businesses, which frankly have kind of underperformed over the last couple of years. It wasn't that long ago when we had the companies without profits and lots of growth were really what drove the bus. And now, we're more focused on the stable, predictable growers with great balance sheets that have good pricing power and have a lot of brand love. So it's a very highly recognizable portfolio currently.
So help me out. Microsoft up 41% in 2020. It was up 51% last year. Oh, in 2019, it was up 55%. Speaking of healthy balance sheets, it has a lot on its balance sheet, or a little bit less, as it buys Activision. Do you want to change your holdings at all because of this, or do you like Microsoft even more and want to add to the position?
Well, I would love to add probably a little bit lower than where it is today because it really hasn't had a real deep sell-off yet. I did find the potential acquisition of Activision pretty interesting, and using Activision's cash as part of that. So
interesting, good. I'm scratching my head. Okay.
Yeah, no, I think I like that. Just moves further into gaming and also with the potential of what the metaverse could look like at some point. So I mean that IP and staff and engineers, they're hard to come by. So in some ways they're buying the infrastructure to keep building their video business, their gaming business, and whatever the metaverse looks like over time.
Okay, well, speaking of the metaverse, we're not there yet when it comes to Netflix, but that company reporting earnings after the bell tomorrow, increasingly getting into games. What are you looking for from Netflix?
Last quarter, they told us that they were going to be spending aggressively on content. So anybody that's surprised that free cash flow is down when they report tomorrow, you just didn't pay attention to last quarter. Bigger picture, though, we still think, let's say they have 220 million subscribers around the world. We think they have 500 million plus. They got 29 billion in revenue now. That's going to equate to maybe 100 billion in revenue. So, I think this is the brand when people around the world start to search for content. It used to be the cable channel that you opened up. Now I think it's Netflix first. And then if you can't find what you want, you go other places. So it's still the dominant brand. And, if the market, right now the market's in kind of sell everything mode. So if the response is lower, I'm going to buy more for sure.
What name have you most recently been adding to?
Well, we have been adding, because of the market volatility, we've been adding some stable, predictable type of, defensives. So we added pretty aggressively, NextEra Energy. Not everybody knows what NextEra Energy is. It's the old Florida Power and Light. But so it's a public utility, but they also have a renewable energy business that's high growth. And so it's a public utility with great stable revenues, great dividend growth. It's, increased their dividends 25 consecutive years plus. So that and maybe a United Health. I thought the quarter was great. Reported this morning. The stock, has been selling off ever since the print. But again, I think we're more in the sell everything mode. And those kind of stable, predictable businesses I really like in this, in this next, 6-month period, along with some of the more higher beta stuff. So definitely the defense. And even a Sherwin-Williams, I still really like the housing trade, particularly as interest rates get to the top end of the range.
Hey, Eric, what about Amazon, just in the last minute or so that we have with you? The company's down more than 6% year to date. It was only higher in 2021 by 2.3%. What's going on with Amazon?
Well, it's a big yawn, hasn't it? I mean, it's been a kind of a 2-year yawn after a really strong 2000. But, they have had so many spending cycles that lead to higher revenue growth and higher free cash flow periods. So, you have to accumulate the stock when they're in high spend mode to get the benefit of the ramp. when the revenue comes back and the free cash flow goes back. So whether it's this quarter or next, you're going to see all of a sudden the free cash flow vault back up, and people are going to be surprised, and the stock's going to catch a bid like it has for the last 25 years.
Just quickly, 20 seconds. Does Amazon become a dividend company at some point, a dividend payer, or they don't need to?
I don't think it's part of their philosophy and their mentality. There's a lot of those that do, but I just don't see Amazon becoming that.
All right, we're going to leave it on that note. Always love talking with you. You get into the specifics, you get into the names that are in your portfolio and explain why. So thank you so much for that. Eric Clark, he's portfolio manager at Rational Dynamic Brands Fund, joining us on the phone from San Diego. As we mentioned, his stock has been, his fund has been an outperformer, up on average 22% annually, and we've got it in the 89th percentile according to Bloomberg data, Tim.
Well, stocks are at session lows right now. The Dow, the S&P 500, and the NASDAQ all lower. The NASDAQ down by more than 1%. Coming up next, it's Beyond the Bell, our cross-platform coverage with the folks at Bloomberg TV on YouTube, Bloomberg TV, and on Bloomberg Radio. You're listening to Bloomberg Radio. This is Bloomberg.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, Taylor Riggs counting you down to the closing bell, here to help take us beyond the bell. It's our global simulcast with Tim Stenovic, bringing together our Bloomberg television, radio, and YouTube audiences. And Tim, as we get closer to the closing bell, we are seeing a little bit more weakness and now starting to touch some of those, correction milestones. 10% on the NASDAQ composite from its all-time high, 9% for the NASDAQ 100. And I think we maybe don't necessarily have Tim right now, but let's keep working our way through this right now. The S&P 500 down about 5% from its all-time high. Similar story for the Dow Jones Industrial Average. The Russell 2000, we know, has been in correction territory ever since the beginning of December. And now the big question is, Caroline, is this too much of a reaction to what people think the Fed is going to do, or maybe not enough?
Yeah, meanwhile, yields are actually coming off of their previous lows of the day. So we are still down in terms of a yield on a US 10-year of some 3 basis points, but have been much more than that, more of an aggressive move. So maybe yields sort of starting to push back. We're reworking some of the initial movements of the day, Tim.
Yeah, on a day like today, when I'm seeing the benchmark like the NASDAQ composite fall into correction territory, I'm also taking a look at Kathy Wood's ARK Investment Management and her ARK Innovation ETF, those high-flying tech companies, at another 52-week low today, almost wiping out that 2020 gain that it had versus the S&P 500. The delta there, only about 10% now, guys.
And Tim, when you were reading her note this morning, it was interesting. She talked a lot about a recession and deflationary risk being a key theme here as we enter the next 3 to 6 months. We just had Patrick Palfrey, though, remain on, really talking about how inflation can be good if it means increasing revenues and, of course, some of that protection of the margins that Gina Martin-Adams was talking about.
And just a quick note here for our audience. We actually are waiting for a press conference from the President of the United States, Joe Biden. When that happens, it's scheduled for 4 p.m. We will be bringing you that live. But in the meantime, let's work our way here through what's happening in the markets. The Dow Jones Industrial Average going to finish the day down by about 339 points, or about 1%, is now down about 4.7% from its all-time high. The S&P 500 down about 1%, or 44 points, now down about 5.5% from its all-time high. The NASDAQ composite down 166 points, 1.15%. That gives it a 10% decline from its all-time high. The Russell 2000 down 1.6% here on the day, and now down more than 14% from its all-time high.
Yeah, I think what's particularly interesting, Romaine, about the S&P 500 today and also the NASDAQ composite is that for much of the day it was actually positive, and it actually waffled between positive and negative throughout much of the day. What happened? Yeah, what happened though late in the day, especially on the S&P 500, where we did take that leg lower?
How much of it could be sentiment? I know Romaine's going to check my math as he always does, but I would argue the stocks index as well, off 4% yesterday, almost 2% today, also in correction territory. So you're really thinking about where we are with that cyclical trade, with sort of that risk on sentiment with some of those high flyers. As yields have readjusted long term, the path has indeed been higher. Let's get back to the equity market. Similar to yesterday, as we do for our radio audience, the sectors in the green, sectors in the red. There is some red even in the green sectors as we think about the negative breadth that we had yesterday and how that continues today. A few that are in the green, it certainly feels defensive. It feels like those companies who can pass on those inflationary costs. Think about household products, food and staples, utilities. Those are all up anywhere from 1% to almost 3% on the day. You go downward, and unfortunately, if you're long in these markets, a red market is indeed remaining.
All right, Taylor, I'm going to have to interrupt you for a second. We are 364 days away from President Joe Biden's inauguration. As he starts his second year in office, we have his press conference here from the White House.
Good afternoon,
Let's listen
everyone.
in on what the President of the United States
Tomorrow
has to say.
will mark 1 year since I took office. It's been a year of challenges, but it's also been a year of enormous progress. We went from 2 million people being vaccinated at the moment I was sworn in to 210 million Americans being fully vaccinated today. We created 6 million new jobs, more jobs in 1 year than any time before. The unemployment rate dropped to 3.9%. Child poverty dropped by nearly 40%, the biggest drop ever in American history. New business applications grew by 30%, the biggest increase ever. And for the first time in a long time, this country's working people actually got a raise. People, the bottom 40%, saw their income go up the most of all those that got a raise. We cut health insurance premiums for millions of American families, and we just made surprise medical bills illegal in this country. You know those bills you get that you don't expect of $2,000 to $5,000 from the hospital beyond what you thought you were going to have to owe because of the consultation you weren't told was going to cost that much? No more. They're now illegal. Thanks to the American Rescue Plan and other actions we've taken, we've seen record job creation, record economic growth in the past year. Now, thanks to the bipartisan infrastructure bill, we're about to make a record investment in rebuilding America to take us to be the #1 best infrastructure in the world. Well, now we're way below that. We'll be creating better jobs for millions of people, modernizing our roads, our bridges, our highways, our ports, our airports, everything from making clean water, removing lead pipes, that every American can turn on a faucet and drink clean water. Urban and rural and suburban communities. It's going to make affordable high-speed internet available to every American in urban, rural, and suburban areas. We've never done that before. Now we are. We're in the process of getting that done. Still, for all this progress, I know there's a lot of frustration and fatigue in this country. And we know why. COVID-19, Omicron has now been challenging us in a way that it's the new enemy. But while it's cause for concern, it's not cause for panic. We've been doing everything we can, learning and adapting as fast as we can, and preparing for a future beyond the pandemic. All I know that after almost 2 years of physical, emotional, and psychological weight of this pandemic and the impact it's had on everyone, for many of us, it's been too much to bear. We're in a very different place now, though. We have the tools, vaccines, boosters, masks, tests, pills, to save lives and keep businesses and schools open. 75% of adults are fully vaccinated. We've gone from 90 million adults with no shots in arms last summer and down to 35 million with no shots as of today. And we're adding about 9 million more vaccinations each week. We're going to stick with our vaccination efforts because vaccinations work. So get vaccinated, please, and get your booster. Look, we're also increasing testing. Should we have done more testing earlier? Yes, but we're doing more now. We've gone from 0 at-home tests a year ago to 375 million tests on the market in just this month. If you buy a test at a store, your insurance will reimburse you. On top of that, we're making 1 billion at-home tests available for you to order and be delivered to your home for free. Just visit covidtest.gov to know how to get that free test kit to your home. In addition, there are 20,000 sites where you can get tested in person for free now. And now, We have more treatments that people can, for people to keep people out of the hospital than any other point in the pandemic, including life-saving antiviral pills. We purchased 20 million of these new Pfizer pills, more than any country in the world. The bottom line on COVID-19 is that we're in a better place than we've been and have been thus far, clearly better than a year ago. We're not going back to lockdowns. We're not going back to closing schools. Schools should stay open because the American Rescue Plan, we provided to states $130 billion. $130 billion to keep our students and educators safe and schools open. Funding for ventilation systems in schools, social distancing, hygiene for classrooms and the school buses. In addition, we've added another $10 billion for COVID-19 tests to be able to be administered at schools. Many states and school districts have spent this money very well. Unfortunately, some haven't. I encourage the states and school districts that use the funding to protect our children and keep our schools open. Use it. The COVID-19 is not going to give up and accept things. It's just not going to go away immediately. But I'm not going to give up and accept things as they are now. Some people may call what's happening now the new normal. I call it a job not yet finished. It will get better. We're moving toward a time when COVID-19 won't disrupt our daily lives, where COVID-19 won't be a crisis, but something to protect against and a threat. Look, we're not there yet, but we will get there. Now, the second challenge we're facing are prices. COVID-19 has created a lot of economic complications, including rapid price increases across the world economy. People see it at the gas pumps, the grocery stores, and elsewhere. So here's what we're going to do. A critical job in making sure that the elevated prices don't become entrenched rests with the Federal Reserve, which has a dual mandate: full employment and stable prices. The Federal Reserve provided extraordinary support during the crisis for the previous year and a half. Given the strength of our economy and the pace of recent price increases, it's appropriate, as the federal Chairman Powell, the Fed Chairman Powell has indicated, to recalibrate the support that is now necessary. I respect the Fed's independence, and I've nominated 5 superb individuals to serve on the Federal Board of Governors, men and women from a variety of ideological perspectives. They're eminently qualified, historically diverse, and have earned bipartisan praise. And I call on the United States Senate to confirm them without any further delay. And here at the White House, and for my friends in Congress, the best thing to tackle high prices is a more productive economy with greater capacity to deliver goods and services to the American people. And a growing economy where folks have more choices and more small businesses compete, and where more goods can get to market faster and cheaper. I've laid out a 3-part plan to do just that. First, fix the supply chain. COVID-19 has had a global impact on the economy. When a factory shuts down in one part of the world, shipments to shops and homes and businesses all over the world are disrupted. COVID-19 has compounded that many times over. A couple of months ago, in this very room, we heard dire warnings about how the supply chain problems could create a real crisis around the holidays. So we acted. We brought together business and labor, and that much predicted crisis did not occur. 99% of the packages were delivered on time, and shelves were stocked. And notwithstanding the recent storms that have impacted many parts of our country, the share of goods in stock at stores is 89% now, which has barely changed from the 91% before the pandemic. I often see empty shelves being shown on television. 89% are full, which is only a few points below what it was before the pandemic. But our work's not done. My infrastructure law will supercharge your effort upgrading everything from roads and bridges to ports and airports, railways and transit, to make the economy move faster and reduce prices for families. Second thing, My Build Back Better plan will address the biggest cost of working families face every day. No other plan will do more to lower the cost for American families. It cuts the cost for childcare. Many families, including the people sitting in this room, if they have children and they're working full-time, many families pay up to $14,000 a year for childcare in big cities, less than that in smaller ones. My plan cuts that in half. That will not only be a game changer for so many families' budgets, but it will mean so much for the nearly 2 million women who've left the workforce during the pandemic because of things like childcare. My Build Back Better plan cuts the price of prescription drugs. So insulin, that today costs some people as much as $1,000 a month, will cost no more than $35 a month. It cuts the cost of elder care. It lowers energy cost. And it will do all of this without raising a single penny in taxes on people making under $400,000 a year or raising the deficit. In fact, my plan cuts the deficit and boosts the economy by getting more people into the workforce. That's why 17 Nobel Prize winners for economics say it will ease long-term inflationary pressure. The bottom line, if price increases are what you're worried about, the best answer is my Build Back Better plan. Third thing we're going to do, promote competition. Look, in too many industries, a handful of giant companies dominate the market in sectors like meat processing, railroad, shipping, and other areas. This isn't a new issue. It's not been the reason we've had high inflation today. It's not the only reason. It's been happening for a decade. But over time, it has reduced competition, squeezed out small businesses and farmers, ranchers, and increased the price for consumers. We end up with an industry like the meat processing industry, where 4 big companies dominate the markets. Pay ranchers less for their cattle they grow, charge consumers more for beef, hamburger meat, whatever they're buying. Prices are up. Look, I'm a capitalist, but capitalism without competition is not capitalism, it's exploitation. So I signed an executive order to tackle unfair competition in our economy, and we're going to continue to enforce it, along with working with Congress where we can. I'll close with this. We have faced some of the biggest challenges that we've ever faced in this country these past few years. Challenges to our public health, challenges to our economy, but we're getting through it. And not only are we getting through it, we're laying the foundation for a future where America wins the 21st century by creating jobs at a record pace. Now we need to get inflation under control. We have developed an extraordinarily effective booster shots and antiviral pills. Now we need to finish the job to get COVID-19 under control. I've long said, it's never been a good bet to bet against the American people or America. I believe that more than ever today. We've seen the grit and determination of the American people this past year. But the best days of this country are still ahead of us, not behind us. Now, I'm happy to take questions. Yes.
Thank you, Mr. President. I know some of my colleagues will get into some specific issues, but I wanted to zoom out on your first year in office. Inflation is up. Your signature domestic legislation is stalled in Congress. In a few hours from now, the Senate, an effort in the Senate to deal with voting rights and voting reform legislation is going to fail. COVID-19 is still taking the lives of 1,500 Americans every day, and the nation's divisions are just as raw as they were a year ago. Did you overpromise to the American public what you could achieve in your first year in office, and how do you plan to course correct going forward?
Why are you such an optimist? Look, I didn't overpromise, and what I have probably outperformed what anybody thought would happen. The fact of the matter is that we're in a situation where we have made enormous progress. You mentioned the number of deaths from COVID. Well, it was 3 times that not long ago. It's coming down. Everything's changing. It's getting better. Look, I didn't overpromise, but I think if you take a look at what we've been able to do, you'd have to acknowledge we made enormous progress. But one of the things that I think is something that One thing I haven't been able to do so far is get my Republican friends to get in the game of making things better in this country. For example, I was reading the other day, and I wrote the quote down so I don't misquote him. A quote from Senator Sununu when he decided that he wasn't going, Governor Sununu, when he decided he wasn't going to run for the Senate in New Hampshire. Here's what he said. They were all, for the most, quote, they were all, for the most part, content with the speed at which they weren't doing anything. It was very clear that we just had to hold the line for 2 years. Okay, so I'm just going to be a roadblock for the next 2 years? That's not what I do, Sununu said. He went on to say it bothered me that they were okay with that. Then he goes on to say, I said, okay, so we're not going to get stuff done if we win the White House back, Why didn't we do anything in 2017 and 2018? And then he said, how the Republican Sununu spoke to answer the challenge? He said, crickets, yeah, crickets. They had no answer. I did not anticipate that there'd be such a stalwart effort to make sure that the most important thing was that President Biden didn't get anything done. Think about this. What are Republicans for? What are they for? Name me one thing they're for. And so the problem here is that I think what I have to do in the change in tactic, if you will, I have to make clear to the American people what we are for. We've passed a lot. We passed a lot of things that people don't even understand what's all that's in it, understandably. Remember when we passed the Affordable Care Act and everybody thought that, it really was getting pummeled and beaten. And it wasn't until after we were out of office in that next campaign, when that off-year campaign, and I wasn't in office anymore. We went in a whole bunch of districts campaigning for Democrats and Republican districts who said they wanted to do away with health care, with Obamacare. And I started pointing out that if you did that, pre-existing conditions would no longer be covered. And they said, huh? We didn't know that. We didn't know that. And guess what? We won over 38 seats because we had explained to the people exactly what, in fact, had passed. Now, one of the things that I remember saying, and I'll end this, I remember saying to President Obama when he passed the Affordable Care Act, I said, you ought to take a victory lap. And he said, there's so many things going on, we don't have time to take a victory lap. As a consequence, no one knew what the detail of the legislation was. They don't know a lot of the detail of what we pass. So the difference is, I'm going to be out on the road a lot, making the case around the country with my colleagues who are up for re-election and others, making the case of what we did do and what we want to do, what we need to do. And so I don't think I've overpromised at all, and I'm going to stay on this track. You know, one of the things that I remember, and I'll end this with, I was talking with, Jim Clyburn, who was a great help to me in the campaign in South Carolina. And Jim said, and when he endorsed me, and there was a clip on television in the last couple of days of Jim, and it said that we want to make things accessible.
And you know what we have, Ulrika, on this laptop right here?
Porn. It's actually my OnlyFans page, Big Teeth -Donkey.
Prescription drugs. That's making sure you have access to all the things that everybody else has. We can afford to do that. We can't afford not to do it. So I tell my Republican friends, here I come. This is going to be about what are you for? What are you for? And I'll lay out what we're for. Mary Bruce, ABC.
Thank you, Mr. President. You mentioned your Republican colleagues, but right now your top two legislative priorities, your social spending package and voting rights legislation, are stalled, blocked by your own party after months of negotiation. You are only guaranteed control of Washington for one more year before the midterms. Do you need to be more realistic and scale down these priorities in order to get something passed?
No, I don't think so. When you say more realistic, I think it's extremely realistic to say to people, because let me back up. You all really know the politics of this country and your networks and others, you spend a lot of time, which I'm glad you do, polling this data, determining what the American people's attitudes are, et cetera. American people overwhelmingly agree with me on prescription drugs. They overwhelmingly agree with me on the cost of education. They overwhelmingly agree with me on early education. They overwhelmingly go on the list on child care. And so we just have to make the case of what we're for and what the other team's not for. Look, we knew all along that a lot of this was going to be an uphill fight. And one of the ways to do this is to make sure we make the contrast as clear as we can. And one of the things that I think is we're going to have to do is just make the case. I don't think there's anything unrealistic about what we're asking. I'm not asking for castles in the sky. I'm asking for practical things the American people have been asking for a long time. A long time. And I think we can get it done.
You're not going to scale down any of these priorities. But so far, that strategy isn't working. You haven't been able to get some of these big legislative ticket items done.
I got two real big ones done, bigger than any president has ever gotten in the first year.
But currently, Mr. President, your spending package, voting rights legislation, they're not going anywhere. So
that's true.
Is there anything that you are confident you can get signed into law before the midterm elections?
Yes, I'm confident we can get pieces, big chunks of the Build Back Better law signed into law. And I'm confident that we can take the case to the American people that the people they should be voting for who are going to oversee whether the elections in fact are legit or not should not be those who are being put up by the Republicans to determine that they're going to be able to change the outcome of the election. So whether or not we can actually get an election, and by the way, I haven't given up. We haven't finished the vote yet on what's going on voting rights and the John Lewis bill and others. But so look, this is, I've been engaged a long time in public policy, and I don't know many things that have been done in one fell swoop. And so I think the most important thing to do is try to inform, not educate, inform the public of what's at stake in stark terms, and let them make judgments and let them know who's for them and who's against them, who's there and who's not there, and make that the case. And that's what I'm going to be spending my time doing in this off-year election.
You mentioned Republicans and reaching out to them. Some Republicans who may be open to major changes on voting rights, for instance, like Mitt Romney, he says he never even received a phone call from this White House. Why not?
I like Mitt. Look, Mitt Romney's a straight guy. One of the things that we're doing, I was trying to make sure we got everybody on the same page in my party on this score. And I didn't call many Republicans at all. The fact is that I do think that Mitt is a serious guy. I think we can get things done. I predict to you they'll get something done on the electoral reform side of this. But rather than judge what's going to get done and not get done, all I can say is I'm going to continue to make the case why it's so important to not turn the electoral process over to political persons who are set up deliberately to change the outcome of elections. Allison Harris, please.
Thank you, Mr. President. Speaking of voting rights legislation, if this isn't passed, do you still believe the upcoming election will be fairly conducted and its results will be legitimate?
Well, it all depends on whether or not we're able to make the case to the American people that some of this is being set up to try to alter the outcome of the election. And it's one thing, look, maybe I'm just being too much of an optimist. Remember how we thought not that many people were going to show up to vote in the middle of a pandemic? We had the highest voter turnout in the history of the United States of America. Well, I think if, in fact, no matter how hard they make it for minorities to vote, I think you're going to see them willing to stand in line and defy the attempt to keep them from being able to vote. I think you're going to see the people we're trying to keep from being able to show up showing up and making the sacrifice it needs to be made in order to change the law back to what it should be. But it's going to be difficult. I make no bones about that. It's going to be difficult. But we're not there yet. We've not run out of options yet, and we'll see how this moves.
And on Omicron and education, teachers are in revolt in so many places. Parents are at odds over closing schools and remote learning. You say we're not going to go back to closing schools. You said that just moments ago, yet they're closing in some areas. What do you say to those teachers and principals and parents about school closings, and what can your administration do to help make up for learning loss for students?
First of all, I'd put in perspective the question you asked. Very few schools are closing. Over 95% are still open. So you all phrase the questions when people, I don't think it's deliberate on your part, but you phrase the question when anyone watches this on television. My God, there must be, all those schools must be closing. What are we going to do? 95% are still open, number one. Number two, the idea that parents don't think it's important for their children to be in school, and teachers know it as well. That's why we made sure that we had the ability to provide the funding through the Recovery Act, through the act that the first act we passed, to be able to make sure schools were able to be safe. So we have new ventilation systems available for them. We have the way they scrub down laboratories and I mean the laboratories kids go to the bathroom, cafeterias, buses, etc. All that money's there. There's billions of dollars made available. It's there. Not every school district has used it as well as it should be used, but it's there. And so, in addition to that, there is now another $10 billion for testing of students in the schools. So I think as time goes on, it's much more likely you're going to see that number go back up from 95%, back up to 98, 99%. But the outfit, the individuals of the district that says we're not going to be open is always going to get, and I'm not being critical of any of you, it's always going to get front page. It's always going to be the top of the news. But let's put it in perspective. 95, as high as 98% of the schools in America are open, functioning, and capable of doing the job. How about Jen Epstein, Bloomberg?
All right, you are listening to President Biden in the East Room. Just wanted to check if he had more to say. He does have more to say. We're going to go back there in a moment. But President Biden marking his first year in the White House of his term, talking about challenges of COVID and falling prices, not falling prices, facing those higher prices in particular, talking about supply chains. He spoke to him for about 10 minutes and now answering questions from reporters, specifically on his economic agenda and other issues, but confident that big pieces of his economic agenda can get done.
Yeah, currently we should note that our colleague Jen Epstein is asking a question here at Bloomberg News. Let's go back to the president and see what he has to say.
Well, because he's never seen sanctions like the ones I promised will be imposed if he moves, number one. Number two, we're in a situation where Vladimir Putin is about to, we've had very frank discussions, Vladimir Putin and I, and the idea that NATO is not going to be united, I don't buy. I've spoken to every major NATO leader. We've had the NATO-Russian summit. We've had the OSCE has met, etc. And so I think what you're going to see is that Russia will be held accountable if it invades. And it depends on what it does. It's one thing if it's a minor incursion and then we end up having a fight about what to do and not do, etc. But if they actually do what they're capable of doing with the force amassed on the border, it is going to be a disaster for Russia if they further invade Ukraine, and that our allies and partners are ready to impose severe cost and significant harm on Russia and the Russian economy. And, you know, we're going to fortify our NATO allies, I told them, on the eastern flank if, in fact, he does invade. I've already shipped over $600 million worth of sophisticated equipment, defensive equipment, to the Ukrainians. The cost of going into Ukraine in terms of physical loss of life for the Russians, they'll be able to prevail over time, but it's going to be heavy. It's going to be real. It's going to be consequential. In addition to that, Putin has a stark choice. He either de-escalation or diplomacy, confrontation of the consequences. And look, I think you're going to see, for example, everybody talks about how Russia has control over the energy supply that Europe absorbs. Well, guess what? That money that they earn from that makes about 45% of the economy. I don't see that as a one-way street. They go ahead and cut it off. It's like my mother used to say, you're biting your nose off to spite your face. It's not like they have all these wonderful choices out there. I spoke with the Prime Minister of Finland, and, we're talking about concern on the part of Finland and Sweden about what Russia is doing. The last thing that Russia needs is Finland deciding to change its status. They didn't say they're going to do that, but they're talking about what, in fact, is going on and how outrageous Russia is being. We're finding ourselves in a position where I believe you'll see that there'll be severe economic consequences. For example, anything that involves dollar denominations, if they invade, they're going to pay. Their banks will not be able to deal in dollars. So there's a lot's going to happen. But here's the thing. My conversation with Putin, and we've been, how can we say it? We have no problem understanding one another. He has no problem understanding me, nor me him. And the direct conversations were, I pointed out, I said, you've occupied before other countries, but the price has been extremely high. How long? You can go in and over time, at great loss and economic loss, go in and occupy Ukraine. But how many years? 1, 3, 5, 10? What is that going to take? What toll does that take? It's real. It's consequential. So this is not all just a cakewalk for Russia. Militarily, they have overwhelming superiority as it relates to Ukraine. But they'll pay a stiff price immediately, near term, medium term, and long term if they do it. I'm sorry. David Sanger, New York Times.
Thank you, Mr. President. I wanted to follow up on your answer there about Russia and Ukraine. When you were in Geneva in June, you said to us about President Putin, I think the last thing he wants now is a Cold War. Now, since then, of course, you've seen him gather these troops, 100,000 troops around Ukraine. Your Secretary of State said today he thought he could invade it at any moment. You've seen the cyber attacks, and you've seen the demand that he have a sphere of influence in which you would withdraw all American troops and nuclear weapons from what used to be the Soviet bloc. So I'm wondering if you still think that the last thing he wants is a Cold War. And has your view of him changed in the past few months? And if it has, and he does invade, would your posture be to really move back to the kind of containment policy that you saw so often when you were still in the Senate?
The answer is that I think he still does not want any full-blown war, number one. Number two, do I think he'll test the West, test the United States and NATO as significantly as he can? Yes, I think he will. But I think he'll pay a serious and dear price for it that he doesn't think now will cost him what it's going to cost him. And I think he'll regret having done it. Now, whether or not, I think that, how can I say this in a public forum? I think that he is dealing with what I believe he thinks is the most tragic thing that's happened to Mother Russia, in that the Berlin Wall came down, the empire has been lost, the near abroad is gone, etc. The Soviet Union has been split. But think about what he has. He has 8 time zones, a burning tundra that will not freeze again naturally, a situation where he has a lot of oil and gas, but he is trying to find his place in the world between China and the West. And so I'm not so sure that he has David, I'm not so sure he is certain what he's going to do. My guess is he will move in. He has to do something. And by the way, I've indicated to him the two things he said to me that he wants guarantees on. One is Ukraine will never be part of NATO. And two, that NATO or there will not be strategic weapons stationed in Ukraine. Well, we can work out something on the second piece, pretending what he does along the Russian line as well, the Russian border in the European area of Russia. On the first piece, we have a number of treaties internationally and in Europe that suggest that you get to choose who you want to be with. But the likelihood that Ukraine is going to join NATO in the near term is not very likely, based on much more work they have to do in terms of democracy and a few other things going on there, and whether or not the major allies in the West would vote to bring Ukraine in right now. So there's room to work if he wants to do that. But I think, as usual, he's going to, well, I probably shouldn't go any further, but I think it will hurt him badly.
Like you were offering some way out here, some off-ramp, and it sounds like what it is at least an informal assurance that NATO is not going to take in Ukraine anytime in the next few decades, and it sounds like you're saying we would never put nuclear weapons there. He also wants us to move all of our nuclear weapons out of Europe and not have troops rotating through the old Soviet bloc. Do you think there's space for there as well?
No, there's not space for that. We won't permanently station, but the idea we're going to actually increase troop presence in Poland or Romania, et cetera, if in fact he moves. Because we have a sacred obligation in Article 5 to defend those countries. They are part of NATO. We don't have that obligation relative to Ukraine, although we have great concern about what happens in Ukraine. Thank you. Maureen, USA Today.
Thank you, Mr. President. I wanted to follow up on your comment on Build Back Better and also ask you a question about the pandemic. You said that you're confident you can pass big chunks of Build Back Better this year. Does that wording mean that you are thinking about, you're looking at breaking the package up into individual portions? And then on the pandemic, now that the Supreme Court has blocked the vaccination or test rule for larger businesses, are you reconsidering whether to require vaccines for domestic flights as a way to boost vaccination rates?
No, look, first of all, on the last part of the question, the Supreme Court decision, I think, was a mistake, but you still see thousands and thousands of people who work for major corporations having to be tested as a consequence of the decision made by the corporation, not by the standard ISET that is there. I think you'll see that increase, not decrease, number one. What was the first part of your question?
On your comment that you made that you're confident
Yes.
that major chunks of Build Back
Yes.
Better can pass, are you breaking it up? Does that
Yes,
mean?
it's clear to me that that we're going to have to probably break it up. I think that we can get, and I've been talking to a number of my colleagues on the Hill, I think it's clear that we would be able to get support for the $500+ billion for energy and the environmental issues that are there, number one. Number two, I know that the two people who've opposed, on the Democratic side at least, support a number of the things that are in there. For example, Joe Manchin strongly supports early education, 3 and 4 years of age, strongly supports that. There is strong support for, I think, a number of the way in which to pay for these, pay for this proposal. So I think there is, and I'm not going to negotiate against myself as to what should and shouldn't be in it, but I think we can break the package up, get as much as we can now, and come back and fight for the rest later. Ken, Wall Street Journal. Ken Thomas.
Thank you, Mr. President. I wanted to ask you about the economy. As you said earlier, Americans are feeling the squeeze of inflation. Oil prices have been at about a 7-year high recently. How long should Americans expect to face higher prices when they're at the grocery store, when they're at the gas pump? Is this something that they're going to see into the summer, into next fall? And separately, you talk about the importance of the Fed, but isn't that an acknowledgement that you're limited in what you can do? If you're relying on the Fed to make decisions and you're unable to get a Build Back Better proposal through, aren't you simply limited in what you can do to deal with inflation?
Well, look, as you know, Ken, the inflation has everything to do with the supply chain. And I think what you're seeing is that we've been able to make progress on speeding up the access to materials. For example, 1/3 of the increase in cost of living is the cost of automobiles. The reason automobiles have skyrocketed in price is because of the lack of computer chips. So we have the capacity, and we're going to do everything in our power to do it, to become self-reliant on the computer chips that we need in order to be able to produce more automobiles. That's underway. We've already passed, within the context of another bill, money for that in the House of Representatives, before the House of Representatives now. But I think there's a way we can move to, if we can move to get, for example, that one thing done, it can make a big difference in terms of the cost of, the total cost of living. Now, with regard to the whole issue of energy prices, that gets a little more complicated. But you saw what happened when I was able to convince everyone from, including China, India, a number of other countries, to agree with us to go into their version of their petroleum reserve, to release more into the market. So that brought down the price about 12, 15 cents a gallon in some places more. There's going to be a reckoning along the line here as to whether or not we're going to continue to see oil prices continue to go up in ways that are going up now relative to what impact that's going to have on the producers. And so it's going to be hard. I think that's the place where most middle-class people, working-class people get hit the most. They pull up to a pump and all of a sudden, instead of paying $2.40 a gallon, they're paying $5 a gallon. That's going to be really difficult. But so we're going to continue to work on trying to increase oil supplies that are available. And I think there's ways in which we can be of some value added in terms of the price of gas, natural gas and the like, to take the burden off the European countries that are now totally dependent on Russia. But it's going to be hard. It's going to be very hard. But I think that we have to deal with, for example, like I said, you have a circumstance where people are paying more for a pound of hamburger meat than they ever paid. Well, one of the reasons for that is you don't have that many folks out there that are the ones that are got the big four controlling it all. And so you're going to see more and more, we're going to move on this competition piece to allow more and more smaller operations to come in and be able to engage in buying and providing the access to much cheaper meat than exists now. But it's going to be a haul. Now, and I assume the reason you said if I can't get Build Back Better relates to what those 17 Nobel laureate economists said, that if in fact we could pass it, it would actually lower the impact on inflation, reduce inflation over time, et cetera. So there's a lot we have to do. It's not going to be easy, but I think we can get it done. But it's going to be painful for a lot of people in the meantime. That's why the single best way to take the burden off middle class and working class folks is to pass the Build Back Better piece that are things that they're paying a lot of money for now. If you get to trade off higher gases, you're putting up with higher price of hamburgers and gas versus whether or not you're going to be able to pay for education and or childcare and the like. I think most people would make the trade. Their bottom line would be better in middle-class households. But it's going to be hard, and it's going to take a lot of work.
Well, sir, you mentioned China. Do you think the time has come to begin lifting some of the tariffs on Chinese imports, or is there a need for China to make due on some of its commitments in the Phase 1 agreement? Some business groups would like you to begin lifting up those tariffs on China.
Well, I know that, and that's why my trade rep is working on that right now. The answer is uncertain. It's uncertain. I'd like to be able to be in a position where I could say they're meeting the commitments, or more of their commitments, and be able to lift some of it. But we're not there yet. Nancy, CBS.
Thank you so much, Mr. President. This afternoon, the Senate Minority Leader, Mitch McConnell, said that the midterm elections are going to be a report card on your progress on inflation, border security, and standing up to Russia. Do you think that that's a fair way to look at it? And if so, how do you think that report card looks right now?
I think report cards will look pretty good if that's where we're at. But look, the idea that Mitch has been very clear. He's doing anything to prevent Biden from being a success. I get on with Mitch. I actually like Mitch McConnell. We like one another. But he has one straightforward objective. Make sure that there's nothing I do that makes me look good in his mind, with the public at large. And that's okay. I'm a big boy. I've been here before. But the fact is that I think that I'm happy to debate and have a referendum on how I handle the economy, whether or not I've made progress on. Look, again, how can I'm taking too long answering your questions. I apologize. I think that the fundamental question is, what's Mitch for? What's he for on immigration? What's he for? What's he proposing to make anything better? What's he for dealing with Russia? It's different than I'm proposing that many of his Republican friends or his colleagues are supporting as well. What's he for on these things? What are they for? So everything's a choice. A choice. I think look, I've laid out a proposal on immigration that if we passed it, we'd be in a totally different place right now. But we're not there because we don't have a single Republican vote. My buddy John McCain's gone. So, I mean, it's going to take time. And again, I go back to Governor Sununu's quote. How long? I mean, a rhetorical question. I know this is not fair to ask the press a question. I'm not asking you. But think about, did you ever think that one man out of office could intimidate an entire party where they're unwilling to take any vote contrary to what he thinks should be taken for fear of being defeated in a primary? I've had 5 Republican senators talk to me, bump into me, quote unquote, or sit with me, who've told me that they agree with whatever I'm talking about for them to do. But Joe, if I do it, I'm going to defeat it in a primary. We got to break that. It's got to change. And I doubt you're all, it sounds like I'm being solicitous, you're all bright as hell, well-informed, more informed than any group of people in America. But did any of you think that you get to a point where not a single Republican would diverge on a major issue? Not one. Anyway.
Can you tell us who those 5 Republican senators are?
Sure. No, are you kidding me? I maintain confidentiality.
On voting
but I'm
rights,
sure you've spoken to some.
on voting rights, sir,
Yes.
at your first press conference 10 months ago, I asked you if there was anything you could do beyond legislation to protect voting rights. And at that time you said, yes, but I'm not going to lay out a strategy before you and the world now. Now that legislation appears to be hopelessly stalled, can you now lay out your strategy to protect voting rights?
Well, I'm not prepared to do that in detail in terms of the executive orders I may be able to engage in and other things I can do. But one of the things we have done, we have significantly beefed up the number of enforcers in the Justice Department who are there to challenge these unconstitutional efforts, in our view, unconstitutional efforts on the part of the Republicans to stack the election and subvert the outcomes. We have begun to organize in ways that we didn't before the communities beyond the civil rights community to make the case to the rest of the American people what's about to happen, what will happen if, in fact, these things move forward. If I had talked to you, not you, I'm using you in an editorial sense, if I had talked to the public about the whole idea of subversion of elections by deciding who the electors are after the fact, I think people would have looked at me like, whoa. I mean, I taught constitutional law for 20 years, a 3-credit course in separation of powers, and on Saturday mornings when I was a senator. And I never thought we'd get into a place where we were talking about being able to actually, what they tried to do this last time out, send different electors to the state legislative bodies to represent who won the election, saying that I didn't win, but Republican candidate won. I doubt whether anybody thought that would ever happen in America in the 21st century, but it's happening. And so I guess what I'm saying is, Nancy, is that I think that there are a number of things we can do, but I also think we will be able to get significant pieces of the legislation, if we don't get it all now, to build to get it so that we get a big chunk of the John Lewis legislation as well as the fair elections process.
Sir, on COVID, if you don't mind, you touted the number of Americans who are now fully vaccinated with 2 shots, but even some of your own medical advisors say that people aren't fully protected unless they have that 3rd shot, a booster. Why hasn't this White House changed the definition of fully vaccinated to include that 3rd booster shot? Is it because the numbers of fully vaccinated Americans would suddenly look a lot less impressive?
No, it's not that at all. It's just this has become clearer and clearer. And every time I speak of it, I say, if you've been vaccinated, get your booster shot. Everybody get the booster shot. It's the optimum protection you can have. You're protected very well with 2 shots. If it's the Pfizer, anyway, you're protected. But you are better protected with the booster shot.
The definition right now.
I'm following what the answer is yes, get the booster shot. It's all part of the same thing. You're better protected. Alex Alper, Reuters.
Thank you, Mr. President. I wanted to follow up briefly on a question asked by Bloomberg. You said that Russia would be held accountable if it invades, and it depends on what it does. It's one thing if it's a minor incursion, and we end up having to fight about what to do and what not to do. Are you saying that a minor incursion by Russia into Ukrainian territory would not lead to the sanctions that you have threatened, or are you effectively giving Putin permission to make a small incursion into the country?
Good question. That's how it did sound like, didn't it? The most important thing to do, big nations can't bluff, number 1. Number 2, the idea that we would do anything to split NATO, which would have a profound impact on profound impact on one of Putin's objectives is to weaken NATO, would be a big mistake. So the question is, if it's something significantly short of a significant invasion, or not even significant, just major military forces coming across. For example, it's one thing to determine that if they continue to use cyber efforts, well, we can respond the same way with cyber. They have FSB people in Ukraine now trying to undermine the solidarity within Ukraine about Russia and to try to promote Russian interest. But it's very important that, that we keep everyone in NATO on the same page. And that's what I'm spending a lot of time doing. And there are differences. There are differences in NATO as to what countries are willing to do depending on what happens, the degree to which they're able to go. And I want to be clear with you. The serious imposition of sanctions relative to dollar transactions and other things are things that are going to have a negative impact on the United States, as well as a negative impact on the economies of Europe as well, a devastating impact on Russia. And so I got to make sure everybody's on the same page as we move along. I think we will, if there's something where there's Russian forces crossing the border, killing Ukrainian fighters, etc. I think that changes everything. But it depends on what he does, is actually what extent we're going to be able to get total unity on the NATO front.
If I may ask a quick one on Iran, I just wanted to get your sense of whether the Vienna talks are making any progress, if you still think it's possible to reach a deal for both sides to resume compliance with the Iran nuclear deal, or if it's time to give up on that. Thank you.
I'll do it in reverse. It's not time to give up. There is some progress being made. The P5+1 is on the same page, but it remains to be seen.